Earned income versus passive income. I love this one because I think passive income, for most people, it's a myth. You have an illusion of what it is, and the truth is you need to learn to have earned income, which then invest in some sort of an asset that gives you the passive income. Passive income just doesn't come out of this thing called the internet machine. So let's talk about that. What is the difference between earned income and passive income? Number two, why taxes reward one more than the other significantly. And then last thing we're going to talk about is how millionaires build income, earned, then passive, and get to a place to have a freedom day. So we're going to actually get you a freedom day formula by the end of this video. Okay, so the definition, earned income is going to require you. It's active income is another way to think about it. It's me running this business. It's me being on the front line of different companies. Passive income is regardless of your time. Now, the truth about passive income is I don't like the word because passive means you're going to park it and pray that somebody else is going to have your responsibility. And money is your responsibility, your family's responsibility. And you're not going to be taught this at school, and you're not going to be taught this on the internet machine. You got to actually find someone that's a guru, an expert that understands the models. So I call it Pactive income, because how you really want to invest is not just oblivious to, oh, I've just, found this totally done for me deal and I don't have to do anything. You should at least be looking at your monthly statements. You should be looking at quarterly statements, attending shareholder meetings if that's appropriate for you, but being involved at some level than just thinking you can park and pray and hope it's all going to work out at the end. So passive income doesn't really need you. Active income absolutely needs you. And I'm going to say up until you're well into your 60s, why not keep doing active income? I just had a call with somebody who's 65 today. And why not continue to do active income to continue to build a bigger asset base where you have more money compounding, right? And just a way better benefit. And then with that, you can have the Pactive income, which is passive, being monitored, never passive. Passive is like what? You doing absolutely nothing and just magically people are going to pay you? I think it's odd. And there's a kind of a whole lack of responsibility on your part of whether this is going to work. And then probably what bothers me the most is you don't do anything about it. And when the project doesn't work or something's delayed, you're the victim because you never took any leadership of it and you didn't even know that the project had a problem or it had an issue or something like that. You can tell them at the front line of a lot of these deals. In the Millionaire Maker, we talk about Freedom Day. Freedom Day is when your income is no longer dependent on how many hours you work. Another way to think about Freedom Day, right, or wealth in its definition is that you have enough Pactive income, right, money that's just coming in, that if you didn't do your active income, your earned income, that you'd be fine, your bills would be paid. That's kind of the first goal we're getting you to. And in that goal, you become accredited, then you become worth $500,000, then you become a millionaire. So usually 3 to 5 years, you can get all this done. So let's talk about a few more differences in the active versus passive income. So number one, the real difference in the earned income is there's going to be salaries, there's going to be a team, there are going to be consultants, there's going to be marketing, active services, some level exchange time for money, and earned income tends to stop when you stop or your team stops. So if you think about earned income, you're thinking about running an operating company. And when we talk about living corporate life, right, which is your company makes the money to activate the greatest tax code, the way you're going to activate the greatest tax code is through an operating company, a cash machine, something that you're going to get up and have a marketing department, right? And it could be one person, could be your marketing department, but these aren't all you. That's the big message here. You're going to have marketing. You got to have sales. You have to understand accounting and cash flow. You have to understand how to fulfill. That's probably the thing you're good at. But then you better have a follow-up system for customer service, operational and technical SOPs. So you got at least 7 division anytime you get out of bed to open up an operating company. But that opens up your ability to be the officer and director, which goes into my point number 2. Earned income is highly rewarded in the tax strategies versus passive income. You're not getting the same tax benefits to just have a big job and have an LLC or 2 LLCs full of, passive assets, whether it's real estate, storage, laundromats. If you're just actively in those investments, it's not enough to open up the whole code. So you hear me on YouTube, you hear me on Instagram, you hear me on my social channels saying you can actually have and design the best tax strategy. Most of you haven't even taken one step forward. How many of you actually read the big, beautiful bill and know what it's about, know how it affects you, know how to hold your CPA and your tax strategist accountable? So we have the integration of the team for this reason, right? Your corporate structure, whether you get an LLC, S Corp, C Corp, I get that question all the time. Which one should I get? What is your entirety? Like, what do you do to make money? How is your money made? How have you made money in the last 3 years? What does your tax strategist say? And what do you want to invest in the future? Those are all decisions that decide whether you're an LLC, S Corp, C corporate limited partnership. So a lot of you have your questions out of order because you don't understand finance, right? So I'm coming soon. So watch for it. Finance for non-finance business owners, which is most people. Most people are business owners. They don't know a thing about finance. They don't understand cash flow. They don't understand P&L, and they sure in the heck don't understand the margins of it all. So taxes always rewards the earned income system, right? And the system is not broke. It was built this way. It was built for the entrepreneur. It was built for the wealth builder. And now with this administration, it's even broader with the big, beautiful bill. Businesses that have full operating systems get the broadest deductions. And we're not talking just office, phone, vehicle, the simple stuff. We're talking officer and director benefits. We're talking housing allowances, vehicle allowances, technical allowances. You can even break that down into sub-phone allowances. You can do educational allowances. There's so much that this tax code provides for those that lean in and actually get curious, which is what I'm asking you to do. So I want you to read The Millionaire Maker. I'm going to give it to you in my show notes. It's version 2. There's about 40 more stories than the original 7 stories of how people are becoming millionaires or successful millionaires. I just had a client come back. Haven't talked to him since probably 2005 or 6. He joined in 2002, the big table. He's worth $85 million today and making hundreds of thousands of dollars of passive income. He's not like blind to it. Passive, again, I'm just going to repeat that. Passive means park and pray. You have nothing to do with it. That is irresponsible in anybody's definition. So let's use the word pactive, because you want to be passive. You don't have to do the work. You have to manage the property. You don't have to manage the gas and oil well, but you better be paying attention to your monthly statements and shareholder meetings. Passive income creates leverage because you're going to use your earned income to buy an asset that then can throw off passive income, because I never want you completely passive. Even if you're in the stock market and you're in iFlip, which I'm going to give you a whole gift. iFlip is a place that how we invest in the market through beautiful algorithms, and there's folios. They take you in and out of the market when the market adjusts. So go get an account, get a free account, get a Roth account for your kids, because that is one of the ways, but you have to be active. And if you think 3 months, 4 months, 5 months. I hear this from people that are invested in iFlip that, oh, iFlip doesn't work. No, you don't work because you're not paying attention. When's the last time you logged into your accounts? When's the last time you pay attention to a lot of this? So you can tell as we come into 2026, because we're filming this in February 2026, I'm asking to lean in farther than I've ever leaned, because a lot of you, you're leaning in and wanting it done for you. And I have a magic wand, but it doesn't work. You have to do the learning and the work, and that's what we're here for, is to help you continue to be a great learner. Now, while you're here, I want you to subscribe to my channel, click the notification button. Be here 5 days a week. It's family friendly. We're going on our 5th year of doing this, and I want to teach you a lot about money. If you really want to do a learning journal, you can grab our journal. Again, it's in the show notes below, and it'll be what video did you watch? When did you watch it? What was it about? And then what are you going to do? And what did you learn? So you start building an action plan for what you need in your life financially. Why millionaires and how millionaires build income where they don't have to be there is we do run active businesses, and we use that money to go buy assets as fast as we can, not buy a lifestyle, not pay off bad debt, none of that stuff. Our earned money goes straight into new assets, and then those new assets are highly performing, or you're adjusting the performance to make sure you get the rate of return that you want, whether that's 8%, 10%, 12, 15, 20%, and a variety of diversified rates of return. So millionaires put their money to work in assets, not a lifestyle. Millionaires also build operating systems with team and structures. I mean, technical systems, automation. There's so much AI that a lot of you could use right now. And again, with AI, you want to trust it, but you want to verify the facts. And I can tell you, I have a daughter going through college, and every paper she turns in, they put through some fancy software that tells her the exact percent of AI she used, which is fascinating because she didn't use any. So a lot of you just got to be very mindful about what you're doing to build your systems and build your team. Last thing, millionaires focus on income streams and asset investments, not on job titles and letters behind our name. I've taken so many people out of an MBA program, massive bad attitude program, into a massive bank account program, which is what we do here at the big table. And what I want you to do is read The Millionaire Maker that I've given you earlier in this conversation. I'm also going to give you 2 tickets to our Millionaire Intensive, which is How to Live Corporate Life. I want you to read up to chapter 3. I want you to fill out that gap analysis and get on the phone, have a one-on-one with our team, and find the gaps in your life. And if you have any questions after you've talked to the team and you continue to have that conversation, you can always go to Ask Loral, AskLoral, ask a question, make a request. We'll be answering them 24/7, and we'll be back tomorrow.